Welcome to This Explainer. Today, we're diving into one of the most highly anticipated market events of the week, Walmart's August 20th earnings report. Think of this as way more than just another quarterly update from a big box store. It's actually a massive, flashing warning light for the health of the entire retail sector and, really, the broader global economy. Here's our roadmap for today. We're going to quickly cover the consumer bellwether, the technical setup, valuation and fundamentals, institutional sentiment, and finally wrap it up with a rigid earnings checklist. All right, let's jump right into Section 1, the consumer bellwether, and establish exactly why this specific report matters so much. So Walmart isn't just a massive store. It's a true consumer bellwether because it's literally so huge, employing millions and serving a gigantic chunk of the country across almost every demographic. It gives us this amazing real-time pulse on the economy. We don't have to wait around for lagging government reports to tell us how people are doing. If everyday Americans are feeling the squeeze, maybe they're skipping the new TV and stocking up on bulk beans and rice instead, we are going to see that data show up right here first. It's essentially the canary in the coal mine for consumer spending habits. And that brings us to the million-dollar question on Wall Street right now. Is the average American finally pulling back? Walmart stock has actually been pretty sluggish all year, just kind of waiting for a definitive answer to that question. This upcoming report is the spark. It's either going to ignite the critical back-to-school and holiday shopping seasons, or it's going to signal a broader economic flameout. Because if shoppers are burning through their savings and running up credit card debt, Walmart's numbers will broadcast that story loud and clear. Moving on to Section 2, let's analyze the technical setup, a coiled spring. For months now, this stock has been stuck in this incredibly frustrating, tight range between $68 and $76. It's basically just hovering right around its 50-day moving average, which is essentially the stock's short-term trend line. What does that tell us? It means there's absolutely zero clear momentum right now. Buyers and sellers are in a total standoff, just waiting for a catalyst to push them one way or the other. It's a classic consolidation pattern where the market is literally holding its breath. And that catalyst? It's being priced in right now. The options market is anticipating a 3 to 4% move tomorrow. Now, I know if you're used to trading wildly volatile tech stocks, 3 or 4% sounds like nothing. But for a slow-moving giant like Walmart, a $2.50 to $3 swing per share in a single day is a significant jolt. We're talking about billions of dollars in market cap changing hands in a matter of hours. So, technically speaking, this stock really is a coiled spring. If we see a break above that $76 ceiling, that's incredibly bullish. The next stop is likely around $80 as technical buyers rush in to chase the momentum. But on the flip side, if that $68 floor fails, that flashes a major warning sign, and we could easily see a rapid plunge down to $64 as stop-loss orders get triggered. Tomorrow decides which way this spring violently unwinds. Let's transition into Section 3, valuation and fundamentals, pricing and growth. Let's see what the market is actually pricing in. Looking under the hood, Walmart is currently trading at roughly 28 times forward earnings. Let that sink in for a second. That is an unbelievably rich, almost tech stock level valuation for a company that sells groceries and basic household goods. It represents a massive premium compared to their historical norm, which usually sits around 20 to 22 times earnings. Historically, you buy Walmart for safety and a nice dividend, but right now, you are paying a heavy premium multiple for growth. So, why the massive premium? Well, the market is pricing in explosive growth from Walmart's high-margin segments. I'm talking about things like their subscription service, Walmart Plus, third-party marketplace fees, and their booming digital advertising network. These segments are pulling in margins over 50%, and that absolutely dwarfs their traditional grocery margins, which sit at a razor-thin 5%. Wall Street just isn't valuing them as a traditional brick-and-mortar grocer anymore. They're valuing them as a highly scalable e-commerce and ad platform. But here's the catch. Cooling inflation is actually a double-edged sword here. While we all love lower prices at the register, for Walmart, lower food prices mean less total revenue per basket at checkout. Plus, over the last year, Walmart has really benefited from this trade-down effect, meaning higher-income consumers started shopping there to save money on groceries during high inflation. If inflation cools off and those wealthier shoppers head back to premium grocery stores, that becomes a massive headwind for Walmart's top line. Suddenly, they're fighting to maintain revenue growth in a deflationary environment. Let's pivot to Section 4, institutional sentiment, and decode why it's a completely split camp right now. If we look at the options flow, it reveals a totally split camp. Nobody is going all in here. Cautious smart money is doing this balancing act. They're collecting premium via bullish put selling, basically betting the stock won't completely crash and pocketing a little cash for taking on that risk. But literally, at the exact same time, they are buying bearish calls as insurance, hedging against the downside surprise. Hedge funds and institutional traders are pretty much paralyzed right now. The big money is just waiting for the actual print before committing any serious capital. Meanwhile, if you ask Wall Street analysts, they're painting a dramatically rosier picture. They are overwhelmingly bullish, boasting 12-month price targets sitting around $140. Put that into perspective. That implies a staggering 80% upside from where the stock is trading today. The sell-side community is just incredibly confident that this transition to a high-margin digital business model is going to pay off massively over the next year. But always read the fine print. These are 12-month targets, and they rely entirely on a soft landing. The idea that inflation cools without triggering a recession and that the consumer stays resilient, it totally assumes people keep their jobs and keep on spending. If tomorrow's numbers show that the consumer is officially tapping out and that soft landing is a myth, expect those lofty $140 targets to get slashed in a hurry as analysts scramble to adjust their models. Finally, let's head into Section 5 and boil all this complex data down into a simple earnings checklist. To justify that pricey 28x valuation and actually trigger a breakout above $76, Walmart has to hit a flawless trifecta tomorrow. First up, same-store sales growth absolutely must land at or above 3.5 to 4%. Second, they have to prove this new business model is working by posting double-digit e-commerce growth. And third, the wild card, they must raise full-year guidance. In this market environment, merely meeting expectations will get punished. They have to give the market a rock-solid reason to keep buying at these elevated multiples. Ultimately, it all comes down to your time horizon. Look, Walmart remains a phenomenal, foundational stock for long-term investors looking for steady compounding. But if they miss on any of those three checklist items, tomorrow becomes a highly volatile binary event. Short-term traders, you better strap in. The reaction could be fierce if the numbers fall short, and that coiled spring unwinds downward. So, let's recap. We've got a coiled spring setup on the charts, a tech-level valuation on a grocery store, and a very high-stakes checklist. The smart money is hedged, and the analysts are dreaming big. Based on all the data we've explored in this explainer, what's your call? When that bell rings tomorrow, does the spring break out or pull back? Keep this checklist handy, and let's see what the data reveals.